Okay. Hello, good morning, everyone. Thanks for joining. I think for today's discussion, right, I don't have any sharings. It's not like sometimes we have a specific topic to talk about, but for today's, I'll just go through the questions. I think we have a long list of questions. Some of them I have some view to share. Some I actually don't. Those that I don't have view, we will just skip us. I will just ask around, see anyone who want to comment. So if you think that you are going to give some comment later, you can speak out now so that I can test your mic just to make sure that it's working. You know, sometimes the volume is quite low. Okay, I'll just start. I'll just start from the first question. Okay, the first one. Can ask Chi Keng where he buys his pull bear? Need to falcon punch the bear if China stocks go down. Okay, so for those who are new, we have friend here, but he always posts a question as anonymous. I don't know who is he, but he always have a problem with Chi Keng and like when we talk about Alibaba stocks, I think because of he bought quite a sizable shares of Alibaba and it didn't turn out well. So I think this is not a question. I'll just move ahead. And I think today Chi Keng is not here, right? Yeah, today Chi Keng is not joining us. But I'll ask Chi Keng where he get that, if I remember. Okay, let's move on to the next question. I don't dare to touch stocks that Chi Keng touches. Okay, this is also not questions. Let's move on. With the high inflation rate, there are markets talk about 7 rate hike this year. Will the stock market be badly hit? This one, actually, I pulled up some information last night. Let's take a look. Let me move full screen. Can I make it full screen? Okay, forget about it. I think you guys can see, right, the screen I'm sharing. So this is the CME rate hike website. So we can choose which meetings. So this is the meeting for March 16, 2022, which is the coming Fed hike. So you see there's a table down below, right? So this one is showing the implied probability and how it changed over time. So initially, I think, let's say around January, right, we can still see that most people are thinking just one rate hike. So 79% probability. But after the inflation report that came out, right, the probability has changed. And now market is thinking that there's 93.8% of 50 basis point rate hike. So this is quite a drastic change because, you know, this percentage, right, this is not coming from, you know, like survey or things that is qualitative, you know. So these numbers is calculated from the Fed Fund futures, meaning that if you don't think this percentage is right, you think that it will be 25 basis point and not 50 basis point, right? You can just bet using the Fed Fund futures and you can bet against it, you know. So if the probability is saying very low for just 25 basis point and you bet on it, right, and it turn out correct, then actually you can get a sizable return out of it, because this is like it's like a casino bet, and the probability is here. If you bet with the mainstream opinions, right, which is 50 basis point now, right, then you only get a very small payoff, because your view is aligned with the market anyway. It's not like you know, some opinion that is against the market. So I do feel that this probability usually they will turn out to be correct, because if they make a decision that is not the same, right, then that means the Fed is trying to try to surprise the market, and that usually doesn't turn out well. When the market surprise, then stock market will tank quite drastic. So that's why you can take a look. All this information is available free. So 50 basis point, this is quite significant, given that I think in the last time they hiked for 50 basis point, right, that was I think that was like 20 years ago. So even the last cycle when they do hike, right, is only like 25 basis point every meetings. So just bear in mind with that. So, but come back to the questions, right? What's the questions? Will the stock market be badly hit? And here we are saying 7 rate hikes, right? So 7 rate hikes, same thing. You can just look at the meeting in December. So unlike like March, you can see that almost sure that there will be a 50 basis point, right? Which is market is thinking. But if you just look at December, when we say 7, what we are saying is that you just take a weighted average of all this. So assume 1 rate hike is 25 basis point, and then you just do a calculation. I did that. So it is true that is 7 rate hikes based on the latest available information. But the question here is whether market will be badly hit. I think actually the answer is no. Because all this, right, you can just look back to the previous hike cycle and just see whether let's say there's a rate hike happening in that year, whether market will drop a lot now. And surprisingly, the answer is no. Mainly it's because, as Fed, they do this monetary tightening, right? They will keep an eye on the market. They will keep an eye on the job market, the stock market, all these economic data. They will look at it now. So let's say if the market is really like take a bad hit, right? Say for example, like drop 20%, 25%, right? Then that is saying something about the market also, right? About the economy, right? Then they will take a pause and then make it slow, and they won't do 7 hikes already. So it's not like these 7 rate hike things. This is the view as of now. So they will just, along this year, right, they will just take a look at the data, and if the data is not good, right, they will just slow it down. So I don't think there will be a scenario that they will just close an eye and keep hiking and hike until market drop, and they still continue to hike. So that won't be the case. Yeah. And usually, take now, for example, right, they are happy to do that. It's also because the economy is very strong. Like the job market is very strong. Inflation is good for the business. You see business, they will be posting good results because, they just, all this is because of inflation, right? And the inflation will help them with the revenues also. So all this is also good for the stock market. So there's always 2 forces now. On one end is the monetary tightening. On the other end is that all these corporate corporate revenues, this will tend to increase in a hot economy. So there's a force that is pulling from two sides. That's why I don't think market will crash. But you will see that, let's say, some business they are posting good profit, and then you see the stock market is not like keep rallying like the 2 years ago, right? So that is because investor is paying attention to the monetary tightening as well, because all this monetary policy, when they pull the liquidity out, right, they will put a downward pressure on the stock market. I'll just stop here first, just to look around, see anyone want to give any comment on this or not, because I think since January, all this monetary tightening talk, right, I mentioned that we will keep on coming back to these questions because people will pay attention to Fed message. I'll just stop here, just want to look around, see anyone want to give any comment on that. Anyone? Yang, you want to comment? Or Hayden? What's your view on inflation, on the 7 rate hike?
I have a question. Just now you mentioned that this publicity can be traded. How can it be traded? Is there a particular ticker symbol or platform to do that?
Yeah. Actually, the name of the instrument is called Fed Fund Futures. So it's quite simple because, Fed funds, right? This is essentially the short rate, right? So I think the futures is just like giving, I mean, if you look at the contract, they're saying that, okay, you will pay a certain amount and then you will get the Fed fund rates. For example, like you pay 50 basis point for a certain period, and then you get back the Fed fund futures. So whether rate hike or not, right, will determine the payoff from these futures directly. That's why from the pricing of that futures, you can imply how much is the rate hike. But if that's instrument, I can look it up. I can share in the group later. But the thing is, I think for retail investor, it's not so easy because the size of that instrument is quite huge. Like maybe for minimum, you want to make this trade, right? It could be like 6 digits, you know. I don't remember the details. It's just that it is not like something that you can trade or can bet on it, like just $1,000, $2,000, that kind of instrument. It's mainly for the institutions, so they can trade on it. So we are using that Fed Fund Futures pricing to imply what is the rate. Quite accurate one. I'll trust this Fed Fund Futures more than the dot plot that coming from the Fed. The dot plot, right? That one is really like just survey, and it's very infrequent, right? So only every quarter they will share the dot plot. So that one is really, it's true for that period lah. So after that, there's more data that coming out. It's not shown, it's not updated anymore. So let's say for the coming, the March meeting, you will see a new dot plots, and you will see that the plots getting higher, but you don't know how it will looks like, let's say between the March and June meetings. So yeah, but for Fed Fund Futures, you always get a real time view. Okay, any other questions or any comment?
Thank you, Boon.
Thanks a lot for the question. Okay, if not, we'll just move on. I think because we have lists of questions, I'll just move on. Okay. Wow, this is very interesting question. Hi, my dad has been buying this company stocks for 3 years. Ticker symbol BDX. He has recently reached all-time high. Should he sell to take profits and rotate to SPY? I'm not, this one, quite curious. I don't know if you are able to just unmute and share, right? Because the dad has been buying. At first, I thought that he's saying the dad is working at the company and hence he's buying some company stocks, right? So it's not. So this question is just like anyone, right? Can be anyone like buying a stocks for 3 years and very bullish about it. And then I think the approach that we should take on this question is that maybe you can ask your dad, like, why is he so bullish about the company? And then it could turn out to be a very constructive discussion, right? Because you can challenge the assumption, the view, and then just to ask some clarification questions, and then you can get some input. You can summarize it, right? And after that, you can share in the group, and then we can discuss in the group, right? Then from there, we will have more information. If not, right, because for me, I look at BDX symbol, I don't know about it. So it's hard for me to give any comment. So it's good that you can just get more information first. If not, it will be quite difficult. But for me, I'll just share my view first before we go around. So I think yesterday I pulled out something. Wait. Okay, it's not here. Oh, okay, this is the one. So, my approach, right, to look at any companies, for example, like those companies that I haven't really heard about the name. I think the first one is, of course, to read about the company. I think this company is about like some pharmaceutical business, but I'm not in that industry, so it's also hard for me to know in details what they are doing. But at least we can look at their past revenues and look at their net income, right? So you see the past revenue is going up. I think this is at least a good sign. And then the net income is quite stable, I would say. In the past was quite stable. Then it went down. I think this period is not doing that well. But 2018, I think this one hit other companies as well because there's really sign of recession back in 2018. And then after that, just look at the recent quarters, right? They've been doing quite well. I think just recently, maybe, all these pharmaceutical, they also get a boost from all this COVID situation, right? I don't know. It's just my guess, right? So I'll say pay attention to what's happened in the past 1 year to see, is this trend, right? Is this is this one-off thing or is it something that is working behind the scene? So I think these are the things that we need to look into the details and to find out. So at least from here, this is not company that, those shit companies that you will say, better just stay away, right? Just looking at these two chart alone. And then there's this comment to say that, okay, because it reached all-time high, should he sell or not, right? I think this is a very typical mindset, for people who are trading, right? You just look at the price and you already hit all-time high, then you will have a tendency to sell, right? I think this is perfectly normal kind of reaction. But when you look at this from a long-term perspective, right, we don't just look at the price alone, right? We also want to look at the earnings, the revenue, and hence, if you can plot the chart of, let's say, the PE, you can also compare to see whether it is overvalued now. Because if the price doubled, but the business also double, the revenue also double, their net income also double, then it's not all-time high, right, in terms of the valuation. So that's why I just pull out this chart to show, like, okay, what's the PE in the past 3 years compared to the recent, and you can see that this line, when it goes down, right, what it means is that the earning is growing faster than the price, right? This is true from, let's say, this period around, let's say, beginning of 2021 until end of 2021. But recently, it increased slowly. So at least on a long-term trend, you can see that it is not like super overvalued now. Then from price over cash flow, also the same. I think it came down here, but recently goes up slightly. So overall, just look at these 3 or 4 charts here, right? I wouldn't say I'm worried or concerned that this is a big problem. But this is not enough, all this analysis. You need to go down just to look at the trend and understand what is happening, and then read a bit what is the strategy, what is the direction that the company is heading, read some news on this company. Then only we can form a view of the companies, right? At least this is not something like, some shit companies lah. So that's why, just on the surface, that's why I'm not that worried. But I would really encourage you to speak to your dad just to understand his perspective and learn a bit from him now. I don't think one person can buy a companies for 3 years. I assume this is like dollar cost averaging, like at least regularly buying these companies, right? And he must know something about it that he can share. So it's a good topic to chat with your dad. Anyone else want to share what was your view on this, and any comment, suggestion, advice?
Boonsong here. I can share some screenshots and my screen basically. Share some comments.
Yeah, go ahead.
Okay, everybody can see my screen, right? So yes. Basically, the first thing you want to pay notice is, obviously, this company is a dividend grower. Although rather from absolute figures is really very low, 1% yield, right? But if somebody have a long-term perspective on this stock, it can be quite rewarding. But this is the first thing. Then the second thing is you need to look at the kind of growth that it has. So if you want to just look at free cash flow, it's about 10% grower over 10 years or so. So if you don't know how to calculate KEGA, there's plenty of KEGA calculators like this. As for looking at the price itself for 3 years, right? Let's say that this person has started buying in 2019 or so. So even if that person had good fortune of buying at maybe $216, $220, that's about a 20% capital gain. I don't know whether that's a good time to sell, given that fundamentally the company has not displayed any kind of problems, and long term it might be a good idea. And lastly, my own personal little input about this company. BD is probably going to spin off its diabetes segment. So as you can see, this company is actually pretty big. Look at the price. Okay, the market capitalization of this company is about 76 billion. And if I'm not wrong, the diabetes segment is about maybe revenue of 1 billion. So there will be a very huge mismatch between the market capitalization of this diabetes segment and the company as a whole. So when the company does spin off the diabetes segment, right, that company, that spin off would probably have some kind of selling pressure. and it might be a good thing to hold on to this stock. So just pay attention to announcement coming up from this company and evaluate accordingly. But I think a 20% gain of 3 years is not a really good idea. And much more is that when you sell things, there's basically 3 reasons why I want to sell. First, you found a better idea. I'm not too sure whether buying S&P 500 right now is a good idea. And maybe you need the money, that's the second reason. And third, you'll find a better idea. Find a better idea, need the money, and maybe you're wrong about the company, sorry. So to summarize, these are the 3 main reasons why I want to sell. So unless you are wrong about the company, I don't know whether this is a good thing to sell out, especially if idea is to buy the S&P. Yeah, that's all I have to say.
Thanks a lot. Any other comment? Okay, if not, we continue with the other questions. Yeah, thanks a lot. Well, I saw the Stock Cafe user, the interface, right? Quite nice, right? The chart, everything. It's quite a lot of information there. I haven't used that before.
It's a pretty decent service and very affordable. They have tie-ups with brokerages like Saxon and I think Tiger. So you probably get a limited amount of free membership for that. So mainly for portfolio management, and I do use it for screeners.
Yeah. I think that's very good. So back to just now the questions, right? Please, for the person who's asking this question, please have a chat with your dad and then let us know what's the the question that we asked, right? What was the his view? Share with us what he is thinking. Okay. Okay, let's move on. Is this the end of growth stocks? Wow. Anyone else want to comment on this? I will just look around. Boonsong, you want to share your view?
I don't buy growth stock.
I mean, we need to be more specific because, growth stocks. Usually, I think in our group, we chat about it, right? I think when we say growth stocks, these are the companies like ARK, right? Unprofitable one. And then, let's say like all these C companies, C Limited. Yeah. Because, growth stocks, any companies, I think different people define it differently. We need to be more specific. But let me give my view, which I think I also shared before, right? Okay, with all this, we talk about all this Fed hike cycle. This kind of environment is bad for growth companies because their revenue, or not revenue, their income will come later. Like it's very small now, but then they are growing fast. Hence, their business will be much larger. Let's say 10 years down the road, right? So the cash flow will come very, very late. And with higher inflation and higher interest rate, you will do a huge discounting, and hence their valuation will get hit. So this is one reason. Second reason is that I think depending on how these growth companies fund their business, if they fund it with debt, you also need to be very careful because that will, whenever interest rate increase, right, their cost of interest increase. And for companies that take, let's say, 5 years to break even, to become profitable now because of rate hike, right, they might take 10 years or even forever. So these kind of things, you need to be careful just to make sure that the companies that you invest in are not highly leveraged. But let's say if they are not highly leveraged, right, I believe even for companies that Katie would invested in, right, I don't think they are heavily leveraged. It's just that they are very high growth and high valuation, and they are not profitable at the moment. So the not profitable one, you also need to be careful because if they are not profitable and they are burning cash now, they will need cash injection sometime in the future. And that injection can become very costly. Let's say when they need to raise capital on the open market and by issuing new shares, and that will create a huge dilution. So all these things, right, you should put all this into consideration. And if you are comfortable that the company don't need further cash injection in the future, right, then I will agree that now is a good time to get some exposure if you like the companies. So don't just buy, like I shared earlier, don't just buy because the price has dropped. Like for example, C Limited dropped 60%. If you don't know about the business and you are not confident on the business, don't just look at the 60% drop and you just buy. You know, because after it dropped 60%, what if it dropped another 20%, right? You don't know what to do, right? So I would say don't make the kind of decision to just to react based on the price, right? But if you are already eyeing on the company for some time, right? And now the price has dropped and you like the business and you believe on their strategy, on their growth trajectory, and you can see that they are getting profitable or cash flow positive soon, I think now is a good time to accumulate the positions, right? Let's say between companies like Apple versus company like high growth companies. I would say high growth companies, for those that will turn out to be profitable 3 years, 5 years down the road, right? I can tell you their return will be much bigger than S&P 500. So the question is, can they turn profit or not? Now, these type of questions, you cannot just generalize to say all these growth company, they will turn profitable, right? I would say probably more than half of them were just stuck there and just not able to turn profitable because of their growth disappoint, right? There's a lot of things can happen when you just project forward 3 years, 5 years, right? So of course, if they can grow their business like a very high growth, and they can control the expenses, right? Then earnings will come, right? All these are just assumption. The problem is what if it doesn't come, right? So take all this into consideration. Back to this question, is this the end? I don't think it is the end. And also, I think the answer for this question will depend on which companies lah. Yeah, just keep it short for that. Any other comment? Any other view you want to share? Because and also the next question as well. Any outlook on when growth stocks will recover? We can put this together. Like, anyone want to share your view?
Morning. I have a question. What was the growth stock? Sorry, what was the growth story for Facebook? You know, back in the day when it was really cheap, and what has changed now actually? And you know, I think there's this what do you call it? The metaverse, right? So isn't that also some kind of a growth story for Facebook? Yeah, just what are your views?
Good morning, A. Thanks a lot for the questions. How early are you referring to for Facebook? Are you talking about, like, let's say, like 2013 kind of early, or is it like 2018?
Yeah, I didn't really look at the history or anything, but I suppose it was really low at some point, and then it grew a lot because of some growth story.
All right.
Yeah. So what was the?
I can comment a bit. I think Facebook, right? I think they IPO around 2011 or 2012, and when they IPO, I don't recall that they are profitable at that time. In fact, before the IPO, right, at the VC stage, right, there's always this question whether this company, how do they make money? Because they see that, okay, this is a platform that they can get millions, 100 millions of people to be on board that platforms, right, a social network, right? Everyone agree that it is very impressive, but the question is always like, how do they monetize the platform? Because when this is a new business, right, when they grow that huge, right, also there's concern like, okay, if you monetize, you put a lot of ads, it will hurt the user experience, people will leave, right? So that's the concern at that time. So there's always this question on how to monetize and the revenue, right? There are some revenue, very small. People don't know how much this company can earn. So that's the early phase, like let's say before 2011. Then after the IPO, they do shows that the numbers are improving, their revenue are increasing, the monetization, they are doing great. So let's say from 2012 until 2019, right? You can see that the revenue every year just increase, and the rate is very, very decent. Like I think 30% kind of growth for a very long period of time in their revenue, in their net income. It just shows that this company is doing very, very well. So that's why the market cap has increased to like top 5 companies in US, right? So this is all well until the recent drop, right? I would say mainly is because of their monthly active user has dropped. So there's a sign of this platform has already matured, and whether they are able to grow the monthly active user or not, it become a question. That's why the share price dropped, right? And then in terms of the disruptors, right? TikTok become a disruptor, right? Because people are more attracted to another platform, and the reels, right, that Facebook trying to copy, right, whether they are able to do as well as TikTok. I tried it myself. I don't think they are as good now. So you see, you can try the service. You will know whether they will do they are better or not. I mean, this is not B2B business, right? This is B2C. So you can just try it out. So as long as they are able to grab our eyeballs, our attention, right, then they are able to push ads and they will be profitable. So this is the assumptions. And now the concern is, will they lose this ability to attract the attention given that there are so many other competitors, and the competitors are doing very well. So that's the main reason. And the metaverse, I think I can't comment much, because this is the direction that they want to go to. And it's very hard to see how it will look like given that we are very early now. Like probably, I would say, in the next 1 or 2 years still, right, we are still very early. Like these things that are still building, it will shape the experience of how people consume content, how people interact with each other for, let's say, the next 10 years, right? But if you're having something that is, let's say, shorter horizon, like less than 3 years, right, it's really hard to tell. I would say that probably nothing will turn out in a short period of time, So those who don't have, let's say, patience or don't have confidence on Facebook to see whether they will leading in this metaverse space, right? And those who think that competition is real, then they will just pull out, right? So I think that's the summary of what's happening. I hope that answers your questions.
Yeah. Okay. Thanks.
All right. Anyone else want to comment on this on Facebook or on growth stocks? If not, I'll say, okay, go ahead.
Yeah, I just want to ask for the metaverse. Do you know what Facebook has done, like in terms of actual products in the metaverse? I don't think I've seen any products that I can play in the metaverse other than so-called the Oculus through the games, right? But it's isolated, though. It's not really like metaverse.
Yeah, I think in terms of the product, right? Yes, you are right. There's only Oculus right now. But I think the most recent, I don't recall what's the name of the event, right? They have this event to tell about the shift of the company's name and then what's their direction, right? I think what they are doing there, at least for now, is not something to on the gaming side. I think gaming side for sure there will be a metaverse version, right? But they try to bring in all this metaverse to the workspace, because the demo that they have done, right, is something like, okay, you are living in this metaverse and then you are working in it. You talk to your colleagues in the metaverse. You can see, basically you can feel their presence just sitting next to you. Then there's some technology to record your face, so that inside the metaverse, your face will be recorded, right? Your facial expression can be delivered inside the metaverse, right? So all these things is stuff that they are working on. But in terms of concrete product or services, actually there's none at the moment, because they just announced it like few months ago, right? So they said they are working on it. So they are going to throw like billions and billions into this project, and this is like a 10-year project, right? So that's why there's nothing at the moment. Probably nothing by end of the year also. Maybe next year there will be something that will come out. I don't know. But let's follow on this. But to answer your question, yeah, only Oculus as of now.
I see. Thanks. Yeah, because I read that they spend billions, but I don't actually see the output. But I see other games that have already been, amassing like a lot of following and interest, and I can feel that product. So that's why I was quite curious. Thanks for sharing.
Yep. Thanks a lot for the question. I think that's true for all these, not just tech, right? For other sectors as well, stuff that the company is working on, they will take years to come up in the as a products to the end users. Like you see Apple Car, right? If you look at the history, probably they already like invested in this for like 5 years already, or more, even more, right? We still haven't seen anything, because behind the scene is a lot of mess, right? How to position, how to create, what to create, what's the direction, all these things, and will be a lot of pivoting also, right? So be patient. But I think for those who bought or planning to buy Facebook, I would say I think the how to say the conviction is not on the metaverse itself. I think the conviction should be on the management ability or their capabilities. So their execution skill, because of their track record in building Facebook, right? So you trust that Mark Zuckerberg will be able to lead the companies to a great success in metaverse, then it's okay to buy. But so far, if you look for some concrete evidence, there's none. Okay, let's move on. These two questions, I would say, good question, but I will suggest that next time if you ask this question, I would say be more specific. Like let's say list down 2 or 3 companies that you are interested in, and then give some comments. For example, like what you are seeing in that companies, give your view, and then we can. I mean, if you share your view, then I guess the rest will have other ideas or other observations that they can share, right? Because if we stay too broad, right, it will be harder to comment. Okay, let's move on. Is it a good time to sell Alibaba? I'll just skip these questions because, we talk about Alibaba quite often. I don't have any new updates, let's say, compared to last week. So, and I think others also share, right? For example, like Hayden also share. Just go to the previous week's recording and look for Alibaba keyword. There's timestamp. So you can look at the timestamp and just watch that section. I'll skip that. March FOMC meeting prediction, I think I shown already, close to like around 90% expecting a 50 basis point hike. So let's see if it turned out to be true. I'm a bit skeptical. I'm thinking still 50-50. Even though this is market implied rate, right? But the traders, they're trading on betting there will be a 50 basis point, but who knows, next week it will come back down, right? So all these are changing quite frequently. So yeah. Anyone else want to give a prediction? Or we can do a poll in a group, see people believe there will be a 50 basis point hike or not. Okay, let's move on. Can ask masterleong how he survived when his portfolio crashed 50%. Is he finding job again? Let me see. Okay, masterleong is not here.
He's not in the group also.
Huh? I thought yesterday he joined the group. Yesterday or 2 days ago? Oh, you left again. It's okay. Our group is a hotel. He can just, it's a free hotel, can just come in and go out at any time. No worries. But it's okay. I'll ask him because actually I private messaged him and he said he's happy to join the weekend chat. But I think maybe he forgot. I'll check with him. Maybe we can do a one-on-one session with him and then do an interview also.
He will be
I'll skip this question. Yeah. I'll skip this question. All right. Follow a guru in investing note last year and hoot, didi, gmtx, baba, gree, tal, and 667.hk. There were some good calls, but not enough to save. Overall down 50%. WSID. I don't even know what is WSID. Boonsong, you have any view on this? Oh, what should I do?
Yeah, what should I do?
Your view?
No view lah. Xiao. You follow a guru, then you die with the guru lor. If the guru really wants to help you, right, he will have start a fund, charge you a very reasonable rate, and then you invest with that person lor. Just like what Kelvin is doing, right? Or Kevin. Or planning to do, attempting to do, yeah. But personally, I got Baba, so I wouldn't sell yet.
What about others like 667? Have you heard of this?
Nope. Let me take a quick look.
Okay. Yeah, actually quite a number of names here. I'm not that familiar. I know Titi, Baba, Tal. The rest I actually don't know. But back to this guru part, right? Yeah, I think it's okay to listen to others' people's opinion. Like the entire things about this invest for long-term group is also just everyone sharing their views, right? Everyone is equal. No guru in the group, or you can say everyone is a guru. Up to you. We listen for the opinions, and then we make our decisions, right? You don't follow and just follow he bought, then you just follow him to buy, right? I think that's not a good idea. I think it's okay to listen to the idea, opinions, and then do your own research and then come to your own conclusion. The part that is very, very important, which I stress many times, I think in the past call also, I stress it many times. You need to own your decisions. You cannot outsource the ownership, because if you outsource, for example, you say, okay, the gurus say buy TT, Alibaba, then you buy. Drop 50%. His fault. The guru's fault. You don't have any faults. Then, after you lose 50%, what had you learned, right? Nothing. Always other people's fault, right? So, I think losing money is fine, but make sure that you learn something out of it, right? So, but here, at least if you learn that you cannot follow other gurus, then I think this is also a good learning point. But what I'm saying is that don't just follow the trades. Don't follow trades. You can listen to the opinion, and then whenever you listen, I will suggest that always challenge, have the kind of critical mindset, right? If you say, I think this company, the revenue will grow, right? Then be more critical. Don't say, he said will grow. He said the revenue will increase. It will increase. Don't just follow that like that. You have to ask like, sure or not? How do you know it will grow? Like ask all these clarifying questions, get more information, and see whether it is something that is believable or not, and then cross check with other data points, right? And cross check with other friends, right? So with all this conversation, then you can collect more data and you can refine your view in the future, right? So that one is like an investment. Like you invest the time to have an understanding, and it will help you in the future. Don't just do these kind of things. Very dangerous, Once you outsource your decision, then next thing will be blaming, and then next thing is that you lose money and you still blah. Quite sad, this kind of situation. Don't do that.
Yeah, 667 is a Chinese education stock. Likewise, okay.
The
GRE is a spec, GRE. It's a spec.
Okay, let's move on to the next one. I think this is also interesting question. Why always discuss about Tesla? Boonsong, you want to comment?
No comment. No opinions.
No opinions. Yeah, I think probably because how to say, this group has been around for 1 year plus, and then for other companies, right, that I don't know about, someone may pose a question, what do you think about this company ABC, right? Then you don't see much discussion. But for the companies that I personally invested in, right, let's say if you ask me a question, at least I will give my opinions. Whether that opinion is helpful or not is a different story, but there will be some conversation. So I would say that Tesla is a company that I invested in. It's not my top position, but it's still a sizable allocation to me, at least. Okay, so that's why when I'm there and then I post content that's related to Tesla, of course it will attract other friends that is invested in Tesla. That's why there will be some discussion on this company. I think this is perfectly normal. But recently, I think there's a lot of debate on Tesla. Is also because Daniel has joined. And then Daniel is very, very biased on Tesla. Very, very bearish on Tesla, which is fine. And I can share that he's not the only one. There are a huge community that is very bearish on Tesla, hate Elon Musk. Same for those who are like considered like fanboy of Tesla. Also, there's other communities, right? But because Daniel is in there and then he's sharing very negative news on Tesla, And then, of course, there will be some response on that comment because, some comment are outright FUD, right? So, very shitty kind of comments. I have to respond on that, right? And some comments is really, really good. For example, like he mentioned about the quality of the cars, some recall. These things are not made out. These are true news, right? So I think those are good to know, especially for friends that blindly just think that Tesla is the best in every other segments, right? So to them, right, for this group of people, they're already blindly thinking that Tesla will be the best in everything, So this is also very dangerous. So I think it's good to have a mix of bearish and bullish view, and then we have some discussion. I think these are all fine. As long as we stay within investment discussion, I think that's all good. And you see the type of discussion, or sometimes it's not just about that news, right? Sometimes I think that this kind of reasoning of how to view the companies, how to look at the news, right? If you pay attention on how we dissect those topics, those skills can be used in other companies as well. So I think this is the part that you can learn, even though you may not interested about Tesla, right? So you can. I think that is helpful. That's why I don't stop discussion on Tesla. Then for other discussion, of course, sometimes we go off investing, we talk about other stuff. I think this is also fine because like this group is not just about like investing, right? This is not a paid course that we just very focused talking about investing. It's all about community as well. We know each other, we make friends, right? So there's sometimes go off from investing. I think it's also fine, but just be more mindful on the amount of messages that we type, right? Because I think there are friends that don't log in all the time. They might check in the message, let's say like maybe just 30 minutes a day. Then whenever they see they saw the 600 message, it's also quite hard for them to filter out all the conversations, right? So I would say please be mindful of that now. But let's say there's some discussion that's off topic. I think that's fine as well. Okay, anyone want to share? But I think this is not going to be, I try not to turn it become a lengthy discussion on Tesla because we have other questions to go through. Because whenever we talk about Tesla, I would prefer we have a dedicated session. Just look around. Anyone have any opinion or any view on this? All right, no, let's move on. Can buy Micromechanics. I think one of the better tech stock in SG. Anyone else invested in this company? If no, I can't comment much. I heard about this company. I know they are doing something to do with like electronics, maybe something to do with semicon, right? If I remember correctly, I don't know. But I can't comment. I just recall that it is a value stocks. But I would say don't just buy because it is valuation looks cheap. Pay attention to the moat. I think this company, if they have a moat, right, and valuation looks good, right, then chances of success is very high. The problem is always, the problem with value stocks is always like, can their earnings or their revenues sustain or not? And this one, you really need to understand what are they offering in the market, right? Probably they are serving other, like they are doing B2B business as well, right? So you might want to ask like their clients, are they happy to like continue to seed the business to this company or not? So I think these are the questions that I will ask. I don't haven't done research on this company, so I will skip. Yeah. Anyone else? Last chance if you want to share, or you can like same thing, right? You can share with us your view on the company. Then I think there will be others who will comment. Yeah. Okay. Let's move on. Bought Grab at $11. I think will sell. What do you think? Do we have Yixman here or not? Yeah, Yixman is not here. Yesterday, right, we briefly talked about Grab. I asked a couple of questions whether there's moat on this company or not, right? I don't know. I think that's the question that I posted. Bear in mind that I think this company is not profitable at the moment. And then on the moats part, I actually a bit skeptical. So I personally not touching this company. But that's me lah. To me, it's quite hard to analyze, because this is still considered a startup, I would say, because you just compare their current position versus their ambition, right? You can read their filings, all these prospectus, right? They share quite a lot on what they plan to do. They want to be the super app, right? So you just compare the current scale, current size versus the ultimate goal, right? There's a lot of things they want to do. And then it's very competitive space also. For example, like the fintech space, they will compete with C and so many other like those private VC startups, right? So I think it's very competitive, and then I think it's a bit risky, given that I don't have a conviction in terms of their execution. Yeah, that's me. I'm not trying to paint a bearish picture here, but I just want to look around. Anyone want to share or not? Because I'm struggling to give a response for these questions.
On the topic of copying gurus, right? One of the more well-known value investor, Seth Carman, Valpost Group, he has about a 0 point something% in Grab. I think it's part of the people that were pre-spec, the AGCs. So, but the amount of stock that he has in Grab is actually very, very little. It's about 0.44 of his total portfolio. So, his average buy price is 6.77.
Okay, thanks. Yeah, I think different investor came in at different time. We kind of hard to tell, right? But I would say if you really consider to sell, right, I think most likely, because for the individual stocks that you own, right, you should really have a high conviction. If you don't have conviction, then I would say just cut and move on, right? Just park your money in like some broad-based ETF, S&P 500. That should be the base investment. So whenever you want to invest in one company, you need to ask yourself, okay, will this company is this company better than S&P 500? Like the company better than S&P 500? Like the market average? This is the first question. Then the second question is that, are you confident on that view or not? If you're thinking they are better. If the answer is no to either of these two questions, right, then you should just stay with index. Because if not, I think, very hard. Very hard, You just buy a single company and then drop a lot. And then you're thinking whether you should sell or not. I think why put so much stress on yourself, right? Yeah, you should invest in companies that even if it drops, right, it doesn't stress you out, lah. I think that's I'm trying to say. Okay, let's move on. Any thoughts on how best to hedge a long portfolio of single stocks? Anyone else? Anyone want to give your comment?
Can I go for this? Yang here.
Hi, Yang. Morning.
Morning. Just curious, if you have a single stock, right? Why would you want to hedge? I misunderstand the question. Single stocks means a portfolio of stocks or one company?
I think it's a portfolio of single stocks. For example, like the person owns C, then Grab, then Tao Education, didi. So like maybe 5 or 10 stocks, right? So how to hedge? I think that's the question.
Keep cash on. Okay. Sorry. I think at first when I read the question, I thought it's like one company. Then when you want to hedge, then okay. Anyway, yeah. If you have portfolio, I think the easiest way to hedge is to keep a portion in cash on. 25%, 20% of your portfolio. Cash means deployable cash, where you are ready to deploy, and that doesn't eat into your emergency fund. So that when the market drops, right, you just, if the stocks are things that you are still convicted in, then you just tranche it in, bit by bit. You go by percentage. You drop 10%, you go in another 10% of your reserve. You drop another 10. You drop 20%, you go in 20% of your reserve. You drop 30%. So by the time you drop to 90%, you probably 90% of your reserve should be in lah. But if the stock drop 90%, it means it should come back up lah. U.S. economy and the world economy will not die just like that lah. Even World War III happened. I mean, we went through so many world wars and everything, the S&P 500 chart is a very good chart to see. Yeah, I think that's the easiest way lah. Thanks.
Yep, thanks a lot for the comment. Yeah, I totally agree. Just keep some cash that will offer the best optionality, right? You can deploy, let's say, if the market drop, right? Yeah, I think that's a very good advice. And I think for the friend asking this question, you also need to ask yourself why, right? Why do you need a hedge, right? Because when you are thinking hedging, you might be thinking like, okay, I have a long portfolio of single stocks, right? Then I'm getting nervous now. I think I invest too much, or I'm on leverage margin, stuff like that, right? So you want to hedge, right? You want then the question is why, right? If the why is okay, you are thinking that the market is getting shaky now, you are nervous now, then probably just sell your stocks, just trim also works, right? So don't have to just thinking about all the complicated stuff, like all those derivative options kind of things. So yeah, ask yourself why, what you try to do, like what's your view? Then from there, we can give a more detailed suggestion. Okay, let's move on.
Can I add something?
Yeah, sure, Kelvin. Morning.
Hi, hello everyone. Yeah, I think hedging sometimes seems sexy, but actually there's a cost to everything. Don't forget that actually if you are hedging something, you are giving up something. Okay, so just be aware of that. Hedging is not free. Okay, sometimes you will have to give up some upside. If you think that is reasonable, then you can go to do it, lor. Okay, so it's not free lah. Don't think that I'm hedging. Okay, then I will not lose anything. But there's definitely a cost to everything.
Yep. Thanks a lot. Okay, let's move on to the next question. How you guys juggle day job and investing? Kelvin, you want to share? but what's your day job now? You want to update your situation?
I'm not having a day job.
Okay.
But seriously, yeah, I don't have a fixed job because I own businesses. So that's I'm not the best person to ask.
Okay. What about Boonsong? You want to share? Because yours also kind of deep analysis, right? It will take some time, right?
I copy the gurus.
Okay. Good joke.
You need to sacrifice lah. You need to go out less. Some weekdays night you come back home, you're a bit tired, you just read a bit. And then weekends also don't go out, just keep reading annual reports.
Okay, on a more serious note, I talk about when I started investing now, when I still had a day job. So with that, what Boonsong said, really you have to really sacrifice, you have to really put yourself in a position that you can, you want to learn, okay, you want to understand businesses, and then you have to have the mindset that you are in this for the long term. So don't think that everything is going to be smooth sailing. And also, what helped me a bit last time was also to write down your thoughts, or write down your journal, like a short journal or something. I keep a notes app like that, just to say, just very, very short notes on, okay, why did I want to buy this? How much did I buy this? And then what am I looking forward to? And then keep reviewing back around every quarter. No need to do it every day. It's not something that you need to do every day, but every quarter or at least every year, okay, look back and see why did you buy this at the time, and is it on track? And then learn from there, lor. That's what I did.
Thanks a lot. Just now, you have questions, right? Or you want to comment?
Oh yeah. Actually, I was wondering, that does it really require that much time to invest? I mean, okay, for me, I read the news every day, CNBC, just to make sure that the companies in my portfolio, are not going to hell. So I just keep my eye out for any news regarding any bad news regarding the fundamentals of the company lah. Then if there's no news, it's good news lah. And then actually I guess unless your portfolio has 100 companies, then maybe it's a bit of a headache lah. But I guess if it's maybe I don't know, maybe just 5-10 companies, then I don't see investing being like another job entirely. But I don't know. Maybe I don't delve too deep into numbers or what.
Thanks for the sharing. I think for a friend that's asking these questions, right? It seems that you might be busy with your job and then you don't have time to study all these companies, right? That's my guess. So my suggestion is the individual stocks, we like to talk about it because if our investment is 100% all is about like S&P 500, right? What are we talking about here, right? There's nothing to chat about, There's no specific business to talk about because you already diversified across 500 companies. So this is our, the stuff that we enjoy. We enjoy talking about these companies. We enjoy talking about Tesla, FSD. We enjoy this process. That's why there's this individual stock investing and discussion. But let's say come back to your own investment and your day job, right? I would say that individual stock pick, this is not for everyone. And in fact, it is not for majority of the peoples. Okay, there are people that don't enjoy at all. So you just go for S&P 500 or others. Let's say some MSCI World Index, right? Just make sure it is very, very broad based, and then you just DCA every month consistently, regardless of there's a war or anything, right? You just do that, and your investing, right, will be fine. Like you will be taken care of that already. You don't have to spend so much time to discuss about all this. Like, even which ETF to buy, if you are not sure, later I will just share a little bit. Like, you just need to ask your friend, like, I want to invest in this S&P 500, which ETF should I go for? And ask a trusted friend which broker I should use, right? You just extract all this information, those that is actionable one, and you just execute the strategy, and you don't have to spend so much time with all this individual stock analysis. So that's on the investment partner. Then come to individual stock investing, right? This is, like I said, this is just optional. If you enjoy it, it becomes like your hobby, right? So you will find time for it, right? If you don't enjoy it, don't do it, right? For me personally, I would say I won't suggest so much on reading like CNBC, because usually their reporting is very, very surface, and a lot of misunderstanding on all these news also. If you really want to understand more, like I think Kelvin also shared before, read all these industry magazine or industry coverage. So they will have a more deep dive kind of coverage on certain industry or certain sector or one companies, right? Read those. And if you understand those inside out, right, then actually you don't need much all this news coverage already, because you already know stuff that doesn't change for years, right? For example, like I invested in Amazon, right? I read like all of their annual reports since they IPO until now. So all the shareholder letters, I read all of them. So go through as if I invested in them since IPO, So you can see that what has changed from year to year. They create Prime, they spend in logistics, they spend on Prime Video. All this, that doesn't happen like everything in 1 year, right? It happened in the past 20 years. So after you go through all this, their philosophy, these things will not change, So after that, once I have a good understanding already, then I don't need to follow the news. I'll be fine just holding the stocks, because I know that their DNA, right, will not change in 6 months or 1 year, right? So I don't spend much time on news as well. So that's my comment. Anyone else want to comment on my comment? Okay, if not, we move on. Don't dare to touch stocks that Chi Keng or masterleong touched already, or crash and burn so badly. Same thing. I think if you, don't blame others. So if you blame others, very, very dangerous. I think I've been repeating this for 20 times already. Don't blame others. And for them, read for the opinions, and you might get some insights, right? And if it helps with your process, then credit to them. And if it doesn't help, then you just ignore them. Don't just skip their video, just skip the piece that they wrote, right? I think Chi Keng and masterleong, they are fine without you as a viewer or readers. So they are fine. So don't worry. Okay, next. Yeah, Yang, please go ahead.
Can I add on an analogy to when owning up decisions and everything? A simple one is like when you want to buy a phone, right? Or you want to change a job. You ask around for advice, but if the thing turns south, right, you wouldn't say, oh, because the person asked me to go and take up this job, or because the person asked me to buy iPhone 13 Max and not buy Samsung S21. You will own your decision with your own money. And after that, you won't go around and ask, hey, why should I do this and why should I do that? So if you really want to ask for advice, right, then maybe you should consider engaging paid, fee-based paid investment consultant. Then those people will be aligned with your interests to maybe give you some idea on what you can do. Then and not on random seafood, because those are mass market catered and they're not selling to you, they're selling to everyone. Yeah. So that's one way to look at it.
They're selling entertainment. That's it is all the successful YouTubers, right? Between education and entertainment, I would say at least the entertainment part, there will be a lot of focus on that now. Because if the content is not engaging, right, then nobody watch it. This channel will die. So for sure they have to focus a lot on that. But I would say at least for Chi Keng, I would say his content is quite educational. Like some interesting insight or viewpoints which I also watch his videos. So I think that's definitely good. So everyone is just like don't treat them as like a guru. So they're just voicing their opinions. Just listen to them and others and then form your own opinions. Okay, let's move on. I think we have still quite a number of questions. Tesla 600 looking through, price now 800 range. So, this type of question, I think is really like just speculate on the short term. So, you don't say about 600. 400, can it be true? Also can be true, right? 300, can it be true? Also can be true. Suddenly jump to 1,005, can it be true? Also can be true. So, short term can be anything. It's all driven by sentiment. So I would say don't focus so much on these type of questions. If you're really bullish about it, then you need to lock in the price before it shoot up, right? So you might want to have some position and instead of waiting. If you are bearish, even if it drops to 600, you also shouldn't buy, right? Yeah. So I think focus on the long term, focus on the business, because that is the anchor. The price over the long term, they will move towards the intrinsic value or the business true worth, and you need to know where is that intrinsic number and not about the short term fluctuation. If not, it become a question on if I go to casino and just bet on certain numbers, right, or like Toto, right? Can I become a winner or not? Of course, it can be true, right? There's always a possibility of that happen. Okay, let's not discuss too much on this. I think this is just focus too much on the short term already. I would say remember to focus on long term. Okay, next one. Short term, better to buy STI ETF, China A50 or S&P 500. Okay, this one is very interesting. I think when you compare STI, China, and S&P 500, I think this is a good question because actually three of these, right, there's zero overlap because this is 100% Singapore, this is 100% China, this is 100% US. If you ask like all those like MSCI World, there will be some overlap, right? But this one, there's no overlap at all. So I think this is a good question. The interesting part is this part, the short-term part. So if really you want me to comment on the short-term, I will just pass. I will just see around anyone want to comment or not. We have Eddie here. Eddie maybe can comment a bit on STI and China also. Anyone else want to comment?
I think short term have to define how short. I mean, if you ask me, right, short term is anything less than 1 year. That is my definition of short term. So if you ask me, 1 year, what do I think? What I think
Sorry, Eddie. Eddie, I need to put you on stop here because your voice is like cannot hear at all already. So I need to stop you. Yeah.
Oh, sorry.
It's okay. I don't want you to continue talking and we can't get anything, right? Yeah. So anyone else want to comment on this? No comment? Okay. I'll just give one comment, given that this is focused on short term. Like just now I caught Eddie, you're saying that short term should be, don't know what, 1 year or less, right? Yeah. Time horizon is quite important. Whether you're talking about 3 months, 1 day, 3 months, one year, right? So all this I have no idea. But just a general comment on these sectors. I would say that STI and China, they still have a sizable financial allocation. So, for example, like STI, all the 3 banks plus SGX, this is very, very sizable. China, I think they have they don't have much tech exposure in this A50. So if you buy like MSCI China, I think they will have like Tencent, Alibaba in there. But for China A50, these are the A shares, so they don't have much tech. They have more financials. And S&P 500 is, relatively speaking, they have quite, they have more tech exposure and not so much on financial. So I would say if you are thinking like short-term interest rate goes up, you want to get some exposure in financials, I think it makes sense to have all this STI and China. That's a short-term view, just because of the sector exposure. But let's say talking about long-term, later I will share a video that Mr. Lew, he was live on YouTube yesterday. He talked about 2 industries that will get disrupted. One is, I think it's pharmaceutical or medicine. I think healthcare. So healthcare industry, and second one is banking or financial industry. He said these 2 industries is very will be disrupted. I don't know much about the healthcare, but on the fintech or on the financial industry, I think there will be some disruption that's coming now. So I totally agree on his view on that. So please be mindful on that now, because when you say short term, yes, interest rate goes up, it might benefits, right? But over the long term, do you really want to expose too much on this sector or not? Specifically on STI and China A50. So you might want to ask yourself on that now. So I think that's a comment from my side. Anyone else want to add? If not, we will continue. If a company management sells shares significantly from 25% to 5% within a year, is this a red flag? Although fundamental of the company still sound okay. When you say company management, I don't know. Maybe give some, maybe you can share in the group about which company that you are talking about. Because when we say company management, are you referring to just the CEO alone? Or is it like every insiders? So this is the question that I would want to know. And then second thing is usually if 20% of the float, right? I assume here 20% of the float, right? This is significant change. You might want to find out why are they selling, because sometimes it's just that the founder or the management they want to cash out. It becomes like a M&A situations, right? So that could be possible. So you might want to check that as well. Just understand what's happening because this 20% of float is huge number. There must be some reason, right? They will give explanation, right? So this is not like what's the CEO exercise his option and just sell, right? So those you don't have a explanation one. But if it is huge, usually there's a story behind that. So just from that story, you will know like will it affect the company strategy or not now. Yeah. Other than that, I don't have other comments. Anyone want to add? Or X-Men, I'm not sure if you can share. I think you have some experience looking at this type of situation, right? X-Men. If not, we will just pass now. All right, next one. Anyone has the odd list of China interest rate? Will it lower? Okay. this is China interest rate. Since this drop that I'm pointing here, this is COVID. It happened before COVID, right? So here COVID, and then after that, their economy recovered, and then shoot up very fast. And then since then, if you pay attention to what happened since 1 year ago, right? So it has been downtrend. So you see the 1 year rate is downtrend. And recently, after they do all these things on the property markets, right? So they know that this is too much already. The sector is quite painful, and they try to relax some, at least try to ease the monetary policy. I think we discussed with Chi Keng, I think let's say 1 or 2 months back, he said that, because at that time I said probably because Fed is hiking rates, and then China yield, there will be an upward pressure, and then he disagreed with me. He said actually interest rate has been going down because of monetary easing policy in China. It turned out that I think Chi Keng is right, and I was wrong. So we still see further interest rate drop since then. So you can see this is at least the trend. How long will this take is actually very much depending on the economy, because right now it seems that China economy is still on the weaker side. So that's why the interest rate going down. So if their economy is recovered, all this Omicron stuff that well controlled, right? So for sure the interest rate will go back up. But let's say if there's further weakness, right? This trend can continue to drop because they're still at quite a high level. You can see, let's say their 10-year rates, right, is at 2.8%, right? So even if they drop to, let's say 2%, still is at US level. There's still a wide spread between the China 10-year versus US 10-year. Yeah, I hope that answer the questions. Odds list of China interest rate. I don't know I don't know what is this question about. But whether it will go lower or not, I would say usually interest rate prediction, right? Out of so many things, interest rate is the hardest to predict. So because there's so many things that's moving together, right? So quite hard to predict. But I would just say what will affect the interest rate is the economy, at least for China, that's the case. Because now they are doing easing. If the economy recovered and become hot, right? So they don't have to continue with the easing, the interest rate will go up. So in order to understand the interest rate, you need to understand the economy. Then in order to understand the economy, you need to understand a whole bunch of things, right? So everything become very complicated. So maybe probably don't spend too much time on this stuff. Okay. Hayden, go ahead.
For me, from what I see, I think China has the highest interest rate so far among all the prominent countries in the world. Because the real interest rates, so for example, China's central bank rate is about 3.7%, right? And their inflation is about 1.5%. So if you subtract that, the real interest rate, the real central bank rates for China is about 2.2%, while majority of the European countries and the US are all negative now, with the exception of Russia and Brazil. I think you can also say that why is because a lot of the pricing, for example, natural gas pricing or commodity pricing in China is controlled. But I think in terms of buffer to cut, China has the most currently in the whole world, I think.
Yeah, thanks for the comment. Yeah, I think I totally agree on that. Let's follow this, see how it will turn up. It will be interesting, when US going up and then China interest rate going down. That's something that's quite interesting to watch. Okay, any thoughts on Baba 24 Feb earnings? Hayden, you want to share your view on this? Any speculation?
I think usually the December quarter will be the best quarter due to the 11/11 and 12/12 promotion. So historically, December quarter is always the best of the year, but will it be better than last year? It's hard to say. So I think just mainly focus on their EBITDA and their early cloud growth. That's what I will see. Because the share price is really beaten down so bad. So I don't know whether the bad news are all factored in or not. So have to wait and see.
Yep, true. I think last quarterly earnings, they mentioned about, competition, and then they're spending a lot on all this, right? So hopefully, if we see some improvement on that end, it will be quite good for the companies, right? Because I don't know how much they're going to burn to just fend off competition, you know. Okay.
You can look at that, and you can also look at the EBITDA X, their new initiative expenses, or see their core. Is it actually improving, or is it stabilizing? Yeah.
Yep, true. We'll follow on that. Okay, let's move on. Only started investing in late 2021. People always say timing never matter, but deep inside it will. If invest at high, it will be years or months loss. Interesting question. Anyone want to share your view? I think this is a very broad question. You want to share? Hayden, Kelvin, or Boonsong? Okay, if not, I'll go first. Let's focus on this line here. Timing never matter. I think when people say don't time the market, right, I don't think they are saying that timing is not important, you know. Of course, timing is important. You see the market can go up and down by 20%, right? Say you do a lump sum, 100,000 in, right? If you buy it before 20% rally or after 20% drop, right? Of course, the result will be very, very different, right? So the thing is not saying that the timing is not important. I think what they're trying to say here is that you try to time the market, but it is very, very hard to have good returns from this market timing. You know, it's like, for example, it could be S&P 500 or it could be any stocks, right? It goes up and down. So you let's say for Tesla, I think back to one of the questions that just was asked, right? You say, I try to time Tesla, wait Tesla drop until 500, then I buy. Then I wait until it goes up to 900, then I sell. I do all this market timing. And then you just have to ask yourself, like, has anyone become rich by just doing this kind of timing or not? So I can share with you, because of my interest in all these investing topics, right? I have many friends that, like many of them also have experience, much more experience than me, right? I can just look around. There are many successful investors that already don't have to work because of their investment is so successful, right? But so far, none of them actually, maybe, I won't say none, maybe just one or two that can time it and have a huge success. And that one also I will attribute to luck than something that is systematic. You see, just look at the billionaire index, right? Any trader in there? Is there anyone say, okay, I become a trader by investing, by become a trader for like 20 years and now I'm billionaire? I think almost none, right? Because, you know, it is possible to have some result within short period of time. To be systematically or consistently win by timing is just very, very hard. So I think when people say timing doesn't matter, they are telling you that don't focus so much time in the timing and just focus on stuff that will be more more dependable. For example, like if you buy a business and the business is growing over a long time period, it compounds, and this compounding, right, it will work like 90% chance. You know, but the timing part is like, wow, very tough. So that's why if you focus so much on timing, then you every day spend so much time looking at the chart, buy, sell. Maybe you can try that. I would say don't try, just try it. Then, but you need to give a timeline to yourself. You say timing is important, right? You just time it for 1 year, 2 years, 3 years, and you just review your own results. And you can just review that result against S&P 500. Say, I don't do this timing, I just invest in S&P 500 and do nothing. And you compare the result of the two, right? Then you come to realization, maybe like 1 year, 3 year, 5 year. I hope it is sooner. Then you can review, right? So don't misunderstand this part to say timing is not important. Of course it matters. It's just that the doubt is that whether you can have a good result from timing. Let me put Eddie on mute first because there's some noise behind. Okay, that's my comment. Any other comment you want to add? If not, we'll move on. Okay. both Boons be our guru, please? Is there any other Boon? Okay, let's move on. Only started. Okay, we just talked about it. Is Tesla really going to trash as per what Daniel say? Okay, this one I think I need to comment a bit. You know, we always have a discussion on stocks, on market, on a lot of topics with regards to investment, right? Of course, I will listen to the points. So whenever I ask, I'm expecting some answer, right? People will share with me their opinions, their view. I think it's good to listen. And when we are listening, we try not to judge too much, because if you are listening and then you are thinking of other stuff to just keep on debating, right? You're actually not listening. So I would say when we listen for opinions for viewpoint, we just listen. Then for me personally, I will ask okay, if you are so bullish on this company or so bearish on this company, what are you doing about it, right? For example, my friend always tell me, okay, I think this company is good. Then I will ask how much you own, how many percent, what is the absolute amount. This kind of information to me is very helpful for me to judge how much confidence the person has on his viewpoint. Okay, so let's say if you tell me you are very bullish on Apple, how much do you own? What is the percentage allocation? If you say, wow, I think Apple is the best company in the world, Steve Jobs is a genius, and now Tim Cook is even more genius than Steve Jobs, then I ask you, okay, how much you own? No, I only have 2 shares. Then how much cash do you have? I have 400,000 cash sitting in the bank. Then to me, that one is no conviction already, right? So to me, that's why the next question is always to test the person whether he believe on what he say. Okay, so come back to these questions, right? That's why I also asked Daniel before, have you really thought about if you think Tesla is going down, right? And let's not talking about let's say short term, 1 month, 3 months things, right? If you believe that it will go down to, let's say, $300 in 2 years time, right? There are options available that you don't have to do shorting. You can buy a put option. You can do some spread trading. There are ways to make profits if your prediction on the company is true, right? But I test with him, he said no. So my take from this is that actually he don't believe on himself. He just like to give comments and throw and so gives all these comments. But he himself, imagine that, let's say you are bullish on the company and you are convinced by him not to invest, and Tesla go 3x in 2 years time, right? And then same type of comment will come out I followed Daniel not to buy Tesla. Now the stock price go up already. These are things, right? Then next question, has Daniel made any loss because of he's wrong on Tesla or not? There's none. He's not in there at all, you know. So that's why I say he don't have conviction on his viewpoint. Do you really want to believe his view? So that's my comment on that now. I'm not saying that I'm super bullish on Tesla will turn out to be a successful. I think we should listen to both viewpoints. But in terms of whether his view you want to follow or not, first thing is ask him whether he has any position on that view or not. So that's the question that I want to pose now. Anyone else want to share on your viewpoint on this? Okay, if not, let's move on. Interest rate projection looks more and more similar to the way 2006 to 2008 raised the Fed fund rates. The odds of us having similar crisis as 2008. Short answer from me, no. Because for 2008, you need to have a huge systemic risk that is built into the system, which as of now, I would say not to the extent of 2008 now. Especially if you look at the banking sector, they are much at a much stronger position. I think this one, I think that's the quick summary. I would say it will be closer to 2016 to 2018 because that's the round of the previous tightening. You can take a look. And actually stock price also going up during that period. But one thing is different is that this round of tightening will be quicker just because of the inflation is much higher compared to 2016 to 2018. So please bear in mind with that. Yeah, that's a short answer from me. Anyone else want to comment on this? No, let's move on. Thoughts on having a 1, 2, or 3 stocks portfolio. I think this is a topic on concentration, right? Yeah. Anyone want to comment on this? I think it's like he's asking for a view on do you think it's okay to have a highly concentrated portfolio of just 1, 2, or 3 company? Okay, if not, I will just give my own comment, just a quick one. I would say depend on your size. Let's say if you are new to investing, right? Let's say you just graduated for 1 or 2 years, or maybe you're still student and you only have, let's say, $2,000, $3,000, $5,000 to invest, right? You want to put all of them into one company, I think that is fine. Because for that size, even if you screw up in that one company, you are fine, right? You still have time and that amount is small amount. So that's first viewpoint. And then second viewpoint is that I think it's a matter of how much conviction that you have. Because let's say let's compare two portfolio. Single stock portfolio. I only have conviction in company A, okay? And compare that against S&P 500. So one company versus 500 companies, right? So I think the person who want to invest in one company, why, right? Because he is very, very confident on that single company, right? High conviction. You don't even want to put like 50% of your money into S&P 500, another 50% in that one single company, because you think that it might run out anytime, right? And why should you put your money in S&P 500? And then if that company run and then your opportunity is basically gone, right? So from that perspective, if you are highly confident that this company will turn out to be better than the S&P 500, then I think it's fine to have a single company. But you need to understand the payoff, right? Because you make your portfolio, the success of your portfolio depending on just a handful of companies. That is a risk that you are taking. Just be aware of that now. There are many other gurus, I say, for example, like Chicken Genius, right? He say he's like almost 100% into Tesla, right? But you also need to ask yourself, like, okay, does he has other assets outside of this stock portfolio, right? Even for masterleong, I recall he mentioned that stock portfolio, his Alibaba shares, right, is not 100% of all his net worth. He actually has some property. I recall. I don't know the details, but imagine that someone has a property. Let's say I own a condo that is worth 2 million, and I have a 400,000 stock portfolio, and that 400,000 I all in single company. To me, that is not concentration, right? Because in terms of total net worth, it's just a small percentage, right? So you need to look at this on a holistic view. So back to you again, right? If you say you got nothing else, 100% all of your assets is in the stock portfolio, then are you okay to see that drop significantly, right? Say, for example, your single company is Facebook, one day drop 25%. Maybe in next quarter, it drop another 25%, right? Who knows, right? Are you okay with that or not? So, I mean, if you go through all this question, and I think probably it's because the size is still small and you just want to go all into 1 or 2 stocks, I think it's fine. You just need to know the consequences, the implications, and the risk that you are taking. Then if you're not okay with that, okay, that's where all this, like ETF, S&P 500, they will come in. Okay, let's move on. Anyone else want to add?
I think generally there were studies done that if you are holding stocks, more than 8 stocks, right, the benefit of diversifying actually stops there, about 8. So, yeah.
Yeah, that's true. I don't think you need to hold, of course, you don't need to hold single stocks, let's say a list of 20 stocks, right? That is definitely not preferable. It's just that in the sense of like diversifications, right? Let's say you can always have a portfolio of, let's say, 60% into S&P 500, then 40% you can invest in 2 companies or 3 companies. To me, that is still diversified, because your largest positions out of your total net worth, as long as it's lesser than 20%, I think that's fine. The part that's not fine is, let's say you only invest in 2 companies, 70% of your net worth in company A, 30% company in net worth B. And if company A drop, right, then your entire net worth gone already, So that is really something, some risk that you might not want to take, because you might end up in a situation that will take, let's say, 5 years just to recover back to the same position if that single company crash hard, Yeah. Okay, let's move on. How you guys know for sure something is in your circle of competence? Wow. Good question. Boonsong, Kelvin, you want to share? You have any view on this?
I think you can start off with what are you getting paid for now? That means your day job. So you start from there. That I think is one of the easiest way to find out what is your circle of competence.
Mm-hmm. Anyone else want to add? Wow, also shy one. No one want to add. Yeah, I also don't have much to comment. I would just say, let's say if there's a topic and then you are able to discuss in details, and then you can always go to one level below. Let's say, for example, like Tesla, FSD versus all this robotaxi tech, right? I can talk on the surface. I can say, AutoX is in there. Okay, they need to do mapping, all these things. I can quote stuff on the surface. Then if you ask me what is the mapping, how does it work, right? Then I will just stop there because it's not my circle of competence already. I don't know. So I think in one indicator to you to test to say whether it's in your circle of competence is that if a person is very curious and have a conversation with you, and you can always go one level down and he ask further question, you can also go down to a very, very fundamental, the first principle levels, right? Then that's, I would say, is within your circle of competence. But everyone has a limit, because it's very tough. All the basic things, the more basic it is, it's getting tougher to have a true rough understanding. So yeah, so that's a good test. And also it's a humbling type of experience if someone go and challenge you and ask all these questions. You will notice that actually you don't know much. Yeah. Okay, let's I'm sharing my experience, by the way, just now, this one. A lot of topics we can speak on the surface, but go down below is very tough now. This is for me. Let's move on. S&P 500 returns 15% over 10 years. Wonder how many gurus beat that. I actually agree with this statement, I personally don't have 10 years track record. If I have, I'm 100% sure that I can't beat this number. Even in the past 1 year, I lagged S&P 500, I think 10%. Or last 12 months. Yeah, very hard to beat. That's why I still have an allocation to S&P 500. The others, I can invest in companies that I like, but I still keep the ETF. Anyone else want to share whether you beat the S&P 500 or you doesn't beat? I think all fun to share, right? Okay, if no, let's move on. Hi, past few months was very choppy and I'm currently hedged with PSQ because I only have a cash account. May I know when is the best time to close the hedge? I don't know. Actually, these questions, right? First, when I read this question, I don't know what is PSQ. I look it up. I believe this is the inverse ETF. I think
it's the inverse ETF of triple Q, Nasdaq.
Triple Q or just QQQ? I think it's QQQ, right?
Yeah, QQQ . Yeah, it's the inverse of Nasdaq.
Okay, negative 1x not the negative 3x. Yeah, so I think Actually, keep it simple. Don't do this kind of thing. The reason is that, when you think you are hedging, right? If you have this position and then you have other position, I don't know your other position, is it like just purely QQQ, or do you have single stocks, And if you have single stocks and you have this PSQ, you need to calculate the overall beta is something that you want to pay attention to, because your individual stocks, in terms of the amount, is it same as this PSQ or not? And what is the beta, right? So it becomes very complicated when you have these two around. That's why I said, keep it simple. If you have too much exposure already and you think it's choppy, you want to just trim your position, have 20% liquidated, just park in cash. I think this is not market timing, This is just like, you want to make yourself, you just want to feed your risk appetite instead of betting the stock market will go down, right? It's fine to take some position off and just wait and see. I think this is all fine. But if you layer with this, right, you need to pay attention, because there will be some, we call it basis risk, meaning that this position might not be 100% negative 100% correlation with your position. There will be situation where, let's say PSQ is flat and then your position actually drop, So I think careful with this when you're doing all this layering. Make sure you know what you are doing. If you insist that you know what you are doing, then it's fine. But just try to be caution on layering stuff. This can be quite complicated, Yeah, Boonsong, you want to add anything on this?
I'm not so sophisticated to hedge stuff, so no comments.
Yeah. Oh, okay. That's on the instrument, right? And second thing is on the closing the hedge, right? Okay. This is again timing. Timing is very hard now. You can see I also tried this, right? I shorted the futures, Nasdaq futures, which is the same as this, PSQ, because these are all Nasdaq 100. So I'm doing the same. And then after I close immediately, the index drop. You see, it's very hard to have to time it well. So I also screw up. So I'm not going to give any opinion on this. Even if I give, nobody should listen. It's very difficult. Let's move on. Any thought on Prosus? Can their food delivery investment ever be profitable? Before I move on, anyone want to share your view on this?
Is there a food delivery platform that is profitable?
I guess Meituan is considered one. But they are, hard to say, they reinvest so much things, right? Sometimes it's very hard to break down, but I believe they are profitable. Okay, I actually, first thing, I'll come back to this question again, right? Where is it now? Thought on Prosus. I think this Prosus, right, you need to understand, I think bulk of their business is actually in Tencent. Okay? So this Tencent stake, right, is already like a huge proportion of what, the value of the business already. And then those, like Monish Pabrai, he bought into Prosus instead of buying Tencent is because, I think if you look at the valuation, the Tencent shares that they own, right, versus their market cap, right, I think it implies that other business is actually very low valuations or even negative, meaning that the Prosus is priced at a discount, But what happens is that even if it is priced at discount, if you don't like other business, right, and you want to buy Tencent, right, then you should go ahead and just buy Tencent. Don't complicate with other stuff. And even if there's a discount today, doesn't mean that this discount will disappear in the future. It depends on the performance of the other business, and the discount can widen one. So that's why I say if you buy Prosus because of Tencent, make sure that you are okay with this. If you are not okay, keep it simple. Invest in Tencent. If you are not okay with this, don't buy Prosus now because, or if you are not okay with Tencent, don't buy Prosus. If you are not okay with all these startups, right, and then also don't buy Prosus now. So that's my comment now, because That all these other stuff, I think some of them are even not publicly traded, right? You don't even have informations like just relatively speaking, how much valuation on each of these segment, I also don't know. And it could be quite difficult to come up with the numbers because some information might not be public, So that's my comment, just a very general comment on that. And then specifically on the food delivery, I take a look, right? This is food delivery business. I think their business, they have this, right? Delivery Hero, and then maybe this Just Eat Takeaway might be also inside their business. But overall, you see, they are not like very huge in terms of global, right? In terms of global, if you're really bullish on food delivery, why not just buy others, right? You see DoorDash is much bigger. And then if you're okay with China stocks, you see Meituan is a much bigger business compared to the rest, right? So I don't know. Depends on the thesis. If you are bullish on food delivery, maybe there are better business and more focus on the food delivery. Because if you are buying this business, right? If you are buying Prosus, you are essentially buying Tencent. And if you are buying Tencent, why not just buy Tencent, right? Yeah. So that is my view. I don't know, Hayden or anyone else want to comment? Because this is talking about Tencent. I think you have good insight also, right? If not, we move on. Can we have a YCX versus Daniel debate? I don't know. This one, I need to ask two of them, can ask in the group, see whether they're open. If they're open, I'm happy to moderate. But I don't know. I also need, they can't debate for the sake of debate, right? You need to have a topic also, right? So you can suggest a topic. If two of them happy, I'm happy to moderate. But the topic should come first. We don't debate for the sake of debate. Okay, if Russia go war, will stock market crash? Just a quick comment. I think this type of news, right, is mostly because of sentiment. So, whenever there's a war, right, there will be sentiment problem, right? All this gold shoot up, then commodity price like oil shoot up because there's fear of disruption, right? So the sentiment will drive the stock market. So this is number one. And whether a prolonged war will actually have an impact, actually not so much. You just have to look back in the history, right? Is there any market crash that is because of the war? You see? Think of one, and then we can further discuss on that. So sadly speaking, even if many people died because of a war, right, it doesn't affect the stock market that much. Okay. I think that's the only 2 points. And even that, right, even say for example, right, if war, then crash. Just take this one as a assumption. If there's a war, market will crash. Then your next question is, would there be a war or not? So you get what I mean? It's very hard to guess whether they will go on war or not, So if you keep on circling around these questions, right, I would just say very, very difficult to come up with a good discussion or good insight that can help with your investment. Because first, you don't know whether war will cause any crash. Second thing is you don't know whether they will go for a war. There's a double uncertainty here. Very hard. So that's why for stuff that we don't have insight or very hard to guess, and the outcome tend to be binary, right? I would just say stay away because it doesn't help with your investment. Okay, let's move on. I think how come this week so many questions? I'll just pause here. Let's say if you have any questions, unmute yourself and just ask, because we might not able to cover all these questions because of the timing. I don't want to keep on talking for longer than 2 hours.
Can you hear me? I think, right, when war comes, right, the oil stocks will go up. Some specific commodities will also go up as well. That has been proven in the case, especially for true. Russia, which is a major exporter of oil and other commodities.
Yeah, I think also worry also, right? Because, if the oil price continue to go up, right, then US side shale gas, they will continue to produce, and then they become a booming industry in US. So very, very, very hard to say, right? Could be turn out to be good for the stock market, right? So I totally agree with you. All right, I'll continue just to cover a couple more questions. If you have any questions, just unmute and speak. If not, if we can't finish, then we just leave it there. Right? Okay. Any idea why Warren Buffett's portfolio is so diversified when he is mentioning of 1 to 3 stocks? Shouldn't him only have 1 stock? Okay, 2 layers here. Layer 1, if you look at Buffett's net worth, I think like 99% of his net worth is on one company, which is Berkshire. Okay. So he is really all in Berkshire. Then second layer is that what is Berkshire holding, right? So their main business, right? These are like their insurance, the rail, Apple, what else? I can't recall all of them. I think they have like 4 pillars of business, right? All these, maybe
42% is now in Apple, 14.6% is now in Bank of America, 8.6% is in American Express.
Not that one. Boonsong, I'm referring to percentage of the total market cap, and then I'm referring to the business, the operating business, not the publicly traded one. Their Geico, all this is not publicly traded, right?
Okay.
Yeah.
I understand.
Insurance.
I mean the control entities are.
Yeah. They have insurance. They have the BNSF. Oh, the energy. Yeah, I missed the energy. The energy business. Apple. Yeah, I think these 4 added together, maybe it's already like I don't know, 80 or 85% of their entire market cap already. But very hard to come up with a definite answer because those are not publicly traded, right? You don't know how much the rail is worth, right? But I think given that they are still quite concentrated, but their publicly traded portfolio, you will see their very small position is because, he has two portfolio managers, right? Ted and Todd, right? What's his name already? So 2 of them, they might have small positions. They are operating somewhat similar to like portfolio managers. Hence, they are smaller position. So when it comes to their core portfolio, is still quite concentrated on. If you see, let's say the Geico as a one business, right, that is quite large as compared to Berkshire market cap. So with that said, that's current position. And if you study Warren Buffett, in the initial years, he had at some time he has very concentrated portfolio. Like Geico, it could be like 70% of his entire portfolio, right? At certain point, right? So he's happy with a concentrated portfolio, but not now because it's very hard for him to deploy because of the size. Yeah. So I hope that answered the question just now. Boonsong, you have anything to add?
Not really, nothing to do with Berkshire. Nothing more to contribute for Berkshire.
Yeah, I think maybe next time we can do a dedicated session just to talk about Buffett. I think too many people have misunderstanding on what he's saying, or what his business is all about. All these things. We just need to get Eddie and then get you, and then 3 of us we can talk about Buffett in details. Should spend more time on that. Okay, let's move on. Recommendation for a 60 years old portfolio. Should we have bonds? Are bonds useless? Wow. Tough question. Anyone want to contribute? Want to give a response on this? Okay, come back to me again. I need to admit, right, this is very, very hard questions to answer. Because if for a 20-year-old, 30-year-old, I would just say, focus on your learning. Even if you want to trade, you want to stop pick, you can try it out. You can screw up, then you can come back, right? I think this one, I'm comfortable to give that kind of statement. Because to me, right, I would just say that learning is very important. And it is preferable that you learn now before your portfolio size become a very huge size, right? So if I want to do day trading, I would rather do it when my portfolio size is 5,000 and not 100,000, right? So that's why I say for a young person who is still working, who still have future cash flow, right? He can afford to make mistakes, so that is easy. But for someone who is 60 years old, probably not working anymore or no ability to work also, it's very, very hard. So meaning that and chances are this person will have a huge portfolio already, because you see, you might be already working for 30 years or 40 years, right? So you already have accumulated some assets. It could be millions, So with that millions, if you don't own any bonds, right, and then you just go all into stocks, right, for example, are you comfortable with that kind of volatility or not? Right? Because there are chances that the stock might drop 30% and take 5 years, 10 years to recover, right? So if you depends on that money for your retirement, are you fine with that? So, and if the market drops, right, you don't have cash to deploy, then you can't take advantage also. So a market drop is a gift for youngsters, but it will be a huge curse for those who already retired. So that's why very, very tricky lah. So I think that's why, given of this situation, it is preferable to have some safe assets in the form of bonds, just to help you smooth out this kind of situation, and you can just liquidate your bonds if the market drop, right? So that's why I would say good to have some bonds, and good to have a more holistic and more balanced portfolio. By balance, I mean you might have some real estate, be it your own, the house that you stay in, and also let's say some for rental is also possible, right? So diversify across asset class also will be huge, helpful. I'll stop here because I think because I'm not a financial advisor, I don't know your situation. I think it's good that you talk to a advisor and then see if they can give you a better advice, right? For me, it's just random people on the street talking random stuff. So I would just say quite challenging to answer this kind of question. Okay. I don't know. You guys, how many more questions should I cover? Any opinion here? I'll cover one more, okay. Then the rest we cover next time, because I think there are still good questions here, so we cover next time. S&P 500 safe haven? No. Answer is no. You just look at the history, you can see that S&P 500 can drop 20, 30, 40% easily. Something that can drop 30% and it could stuck there for not 1 month, right? It could stuck there for 9 months, 2 years, right? That kind of instrument, you can't call it as a safe haven. So my answer is no, it is not a safe haven. But I would say if you compare S&P 500 versus any person, individual stock picks, right? I would say S&P 500 is a good alternative. Like, this is a proxy for you to enter equity stock market. This is a good proxy. Very hard to beat. But you shouldn't assume this is a safe haven, because when we refer to safe haven, right, we are referring to something that is rock solid, something that the value will always be there, Yeah. Like you don't have to worry. So that's why my answer is no. But comes to this, again, it's a portfolio decisions, right? You need to have some cash, some equities, then just have a portfolio that is balanced. And also you need to look at your own situation. What age are you at? I need more inputs in order to give a more helpful answer for this question. Okay, we are 2 hours here. I think I'll put a stop here unless anyone has any burning questions or comment that you want to give. We put a stop here. I'm not able to cover all. Questions keep on coming. Anyone else want to have any questions? Any comment?
There was one question regarding Daniel versus Tesla debate. I would really pay money if Daniel can, if we can watch Daniel talk to a Tesla car.
Tesla car. You mean Tesla car? I can offer. Ask Darren to be the videographer.
Watch him talk to the Tesla car. I would pay money for that.
I don't know. Maybe, you know, these things, we are laughing on it, right? We put this on the record. We were laughing on it, right? Who knows, 10 years later become something that is possible, you know? Because it's nothing much, right? You say talk to a Tesla car. I mean, now we can talk to Siri, these kind of things, right? 10 years, I think maybe doable, you know?
Yeah, definitely. I mean, you can talk to chatbots, everything really right nowadays. So yeah. No, I'm just joking, Daniel. Don't take offense.
Yeah, but Daniel, last week he wasn't here. This week he wasn't here. I don't know if you guys really prefer to speak with him on voice chat, listen to him talking, right? I'm happy to moderate a session just to talk on Tesla from a bearish perspective. I'm happy to do that, you know. So I don't know. On the group, you guys can poke him, ask him to do that. Then I can moderate. I'm happy to do that. And then I need to make sure I have Kelvin here also, just to, you know, to have some critical questions, and then it could turn out to be a good discussion, you know. Yeah, I see. Happy to see debate on Daniel versus Tesla bulls. Yeah, I think I'm also interested. But we need to invite him now. Okay. Okay, I think that's all. Lunchtime. Thanks a lot to all of you tuning in. Give your comments. Appreciate that. And enjoy your lunch. Thank you so much.
Thank you.